Hey, what's going on, everybody? Back with another one. So the big question: did we miss the bottom? Is the bottom in? In this video, I'm going to go over my thoughts on it and where I could see us going forward. But I also want to talk about in this video the psychology of the market a little bit. But I also want to talk about like really how the market acts. Okay, and I'm gonna explain a little bit more about that in the video. But before I do, if you guys can hit the like and subscribe button, I really appreciate it. I really want to keep growing this channel. I'm gonna keep making content for you guys. I try to respond to every single comment that I see. If I haven't commented back yet, I definitely will. I'll get back to you. But yeah, I'm really trying to be as engaged with you guys as possible. And I just want you to know that because obviously you guys watch me and you guys are supporting me. So I want to give back in that way as well, right? So I appreciate you guys. Thank you. So now first I want to talk a little bit about how the market is, because I'm also assuming that there's people here who are very new to the market, just like I was at one point. And so I think I need to be more mindful about helping you guys and explaining to you guys why I also think the way I think, not just from a psychological level, but from the way that the markets really are and how they act. So the markets are like a rubber band, okay? Everything is like a rubber band. Support and resistance is a rubber band. It's not a fine line that's like made of steel and it needs to hit, right? Because the term in the market is bounce. We are looking for it to come to these levels and bounce. You don't really bounce off steel. You kind of just, that's it. You don't move off steel. You hit it and you're gone. So the markets are like a rubber band. So the more the rubber band is stretched and the stock is pushed down, or the crypto commodity or asset is pushed down, whatever you want to call it, whatever they call themselves, is pushed down, the bigger the bounce, right? So the more longer it's been pushed down, the more selling pressure that there's been, the bigger the potential bounce. Okay? So it's like that, and then it could spring back up. So the reason why I've been talking about the crypto market a lot, because I will cover the S&P 500 at some point, and I will go over regular stocks with you. The reason why I've been covering crypto a lot, and altcoins and Bitcoin and Ethereum, is really because this sector has been beat down. It's been beat down since October. Well, not since October, but that's when Bitcoin peaked, October, whatever day it was, October 20th or 12th or 11th. I forgot what day it was now. But, we had the largest liquidation event in crypto history, $19 billion in a day, guys. In a day. It's absolutely insane. We had a lot of market makers go out of business. I saw one of somebody commented, that they don't understand where the selling is coming from. And sometimes I think the same thing. But for me, my personal opinion on that really is coming from all of those market makers that went out of business, right? They were over leveraged. Whatever, essentially whatever money they had left in their crypto assets or in their banks, they had to file for bankruptcy. So they have to pay out whatever loans and debts and things that they had. So basically they're forced liquidations as well. So I also want people to keep that in mind, that a lot of the selling pressure might not be coming from retail anymore. Okay? Because I don't even know anybody else who's selling at this point that's retail. Is there people selling that's retail? Absolutely. But is it the majority of it? No, I think this last push down that we kind of just had in the alts that put us to new all-time lows really had to do more with those institutions having to offload their books fully to pay back all of their debts. Now, that's my opinion. Again, I don't really know. I'm not them. But that's just kind of how I'm looking at it because of, hitting new all-time lows, meaning that some pretty big players had to have been letting go of some assets that they had. That being said, did we miss the bottom? Right, that's the big question. Bitcoin really hasn't still broken out, right? We still have that inverted head and shoulders pattern just chilling there. It's really not, it has not pushed higher. It looks like it's going to though, right? It looks like that there's been like a small range of accumulation up there and that it's going to push us to about that 70,000 range. The thing that's making me a little bit weary, right? And a little bit, now I'm starting to think a little bit differently even, is prior to, I believe it was 2020. So in the last cycle, let's just go with the last cycle. The last cycle, crypto kind of moved on its own. It didn't need the S&P 500 to move higher while crypto moved higher. They didn't need to correlate. This last cycle, they correlated a lot more, but there were moments where they didn't. So it kind of begs the question, right? Like, S&P 500 starts to sell off from a Wyckoff distribution phase, which is basically a massive range of buyers and sellers until S&P has a correction, which I will go into tomorrow with the chart. Tomorrow will give me a much better idea as to what's happening with that. But it begs the question, is crypto going to start moving on its own now without the S&P 500? Is money and capital going to start making its rotation now from gold into these other growth stocks, right? Like and the tech stocks like like Tesla, like Apple, right? Like Google, things like that. Are the institutions now going to start taking their money and rotating it into high risk assets like Bitcoin, like Ethereum, like altcoins, right? So the more that time is going by, the more I kind of see some relative strength starting to form really in the crypto market. And this is a big sign of a potential bottom, because you just had a really massive red candle on the S&P 500, but we also had a lot of selling from gold, and gold is just hanging out just barely at that 4,000 level, guys. I mean, like with gold, really, if it breaks 4,000, of course there's minor supports, but it's gonna come down to about that $3,400 range, right? So you're talking about another 10, maybe 11, 12% correction from here, something like that, right? 10%, 400. Yeah, about another 12% correction from here on gold. So, which would be okay, because if you go to the charts and you look at what's about a 10 to 12% correction on the S&P 500, and again, guys, I'm going to cover this more in detail tomorrow, but really it's got a gap down there. I forgot the exact number right now. I'll go over it with you guys tomorrow, but there's a gap that needs to be closed. There's a couple gaps actually in the S&P 500, but that's the one that gives you about that 10 to 12% range. Could correlate with gold a little bit. And then, so if money's coming out of there, money needs to rotate into something else. And so this is really what's starting to make me think, like, if the bottom is not in, we are very, very close. I truly believe we are very close to a bottom. And you have, what is it? I think it's August 10th is we're going to see if the Clarity Act is going to pass. And if it doesn't pass, then it wouldn't have a chance to pass until like sometime around mid-September. So I'm thinking this. Bottom is at least temporarily in. We're gonna have a sell-off in gold in the next let's call it 4 to 8 weeks, something like that. We're gonna have a sell-off in the SPY for the next 4 to 8 weeks, and I think money's gonna start flowing back into crypto, right? Because why wouldn't the institutions buy the bottom? Retail's not. I'm buying everything. I've been buying Bitcoin. I've been buying Ethereum. I've been buying my altcoins. I have been buying. Again, you guys do what you want to do with your money. Obviously, you know this is not financial advice, all that stuff. This is my pure opinion, and I'm just telling you guys what I'm doing. Okay? I want to give you guys a little story, okay? This is a little story time, real quick. So, I have seen, and I've met so many people who have worked so hard in their life. Okay? So hard, okay? And I used to be one of these people that worked like a dog. I mean, I'm talking 70, 80-hour work weeks, guys. I'm 33. That's where all the gray comes from, okay? Because I'm 33, but my whole 20s, I worked like a dog. I worked, yes, like a dog. And I've met so many people that work so hard and they really got nothing to show for it. And then I met so many people that really never worked a day in their life and they got so much money to show for that. And the reason I make these videos and I talk about these things is to share that with you. That please, guys, in your life, pursue the things that you love, do your passions, and if you're not, I understand that too. Trust me, I get that. I've been there myself. All right? But there's people out there making easy money. And for the most part, it's because they're buying the things that us as retail, we're afraid to buy. Because we follow the herd. All right? If we want to break the cycle, then we need to start thinking on our own. Taking the opinions of people who are educated, who have been doing this for a while. Take my opinion, take other people's opinions, right? You're like, go to other channels. I'm not saying you guys just have to watch me. There's other people out there, okay? But the point is, whoever you choose to follow and go with, make sure that they're educated, they know what they're doing, right? And the thing about the markets is, it's like, the saying is, I think is by the Rothschilds, when there's blood in the streets, you buy real estate. Okay? Like, that's the saying. It's the same thing with stocks. There's blood in the streets in crypto. The stuff's not at zero. We had a $19 billion liquidation event. In a day. We're at new all-time lows. This is blood in the streets. This is why I'm buying. This is why I'm going to continue to buy, because at some point, somebody's buying these. Somebody's buying. Somebody's buying Bitcoin at what? 65,000 right now. Somebody was buying at 58,000. Somebody's buying Shiba Inu right now at 1,000,000,004. Okay? Me included. I'm buying SHIB. I'm buying SHIB. And if it goes to 3, I'm buying 3. 1,000,000,000 zeros and 3. Okay? So look, I just wanted to share that with you guys. I wanted to give you guys a little bit of idea about the markets. I wanted to share with you like how we can get ahead together. Okay? And this doesn't just apply to crypto. Okay? This is not just about altcoins, and this is not just about investing, right? This is about me trying to help and guide people and explain to them all the things that it took me years to learn. Okay? The greatest even investors, okay, Merrill Lynch, let's just go with that right now. Man, I can't remember his name right now. Peter Lynch, I think, right? So one of the greatest investors of all time, he had about a 30% return year over year. He didn't just buy and hold. Now, I'm not saying you can't do that. I'm sure there were stocks he did do that with, but he didn't manage hundreds of millions of dollars in portfolio money to just buy and hold. No. What was he amazing at? Rotation of capital. And so that's why I bring up to you guys rotation of capital and how things are coming out of gold and money's coming out of the S&P 500 and it looks like it's about to come out of the tech stocks. Not because I know it's going to happen aggressively today or tomorrow, but it is slowly trending that way, and that's what I'm seeing. Okay, could I be wrong? Sure. Absolutely. Could I be wrong? S&P 500 decides to go crazy green for the next couple days and gives us another new all-time high? Sure. It definitely could. Is it? I don't know, but doesn't look like it based off of everything that we know about charts and investing and trading and things like that. So that's kind of like something I really wanted to touch base with you guys on. I really wanted to talk to you guys about, like, the rotation of capital has to be part of the plan too, even if you're a long-term investor. And even institutions who are investors get in and out of plays. They cut losses when they need to. They take profits when they need to. They have to. That's how they stay operational. You don't just, you could just buy and hold. There's nothing wrong with that. I don't see anything wrong with that if you're doing that with this S&P 500 and Bitcoin. Those are probably the only two things that I would say, like, do that with. Don't sell it, because probably Bitcoin is going to $1 million. And the S&P 500 will always be the S&P 500 and always give you returns against inflation that are higher than inflation, right? And if the S&P 500 went to zero one day, then America's gone anyway. So you don't even need to worry about money, okay? So this was something that I really wanted to touch base with you guys on. Why I'm paying attention to gold, to Bitcoin, to Ethereum, to altcoins, because money needs to rotate. And institutions love what? They love buying at the bottom. And they love selling at the top to who? To us, to retail. Okay? So I'm not saying that everything's going to go to the moon tomorrow, because I definitely don't think that either. I'm just saying that this is blood in the streets. And when there's blood in the streets, it's time to buy. And that's what I'm doing. All right, guys. Listen, thank you so much for watching the video. I appreciate it, guys. And I'll be back with another one tomorrow where I'm going to talk about the SPY. And we'll go over a little bit on that and what I'm seeing in the charts exactly, and where I think those next levels are going to be for the SPY. And thank you very much.